Welcome to this video, which is on Saturday the 17th of December. What we're going to be doing today is looking at some simple technical analysis. It's very simple to do, but it is highly effective. In my view, will give you some really high probability trades. So what I want to look at today is getting in on trends in motion by an uptrend, buying back to a significant level of support, and in terms of an uptrend, selling back to a significant level of resistance. When I say significant level, I mean a big level that's important to market participants, from banks to hedge funds to people simply hedging currency exposure. I think in terms of a lot of beginners, when they get into the markets or want to get into trades, they come off insignificant levels that don't offer them high probability. So we're focusing on big significant levels. What I'm going to do is do it on a couple of charts today, which are AUD, USD, USD, CAD. Just some ideas also on how you place your stop, and also in terms of how you project targets. Now, in terms of projecting targets, when we're doing obviously the charts in the Member Centre, basically our entry is always technically based, our stop is always technically based. However, in terms of our target, our first target is normally technically based as well, but we may set a bigger profit objective further out on the chart if the big fundamentals behind the chart indicate that we can do this. And in terms of the USD, we see it longer term as out and out bullish on the AUD and on the CAD, and the big fundamentals are not going to be turning around anytime soon. So you'll see our second target on the charts is based in relation to the fundamentals. And in terms of the trades, what I would do is look at them now. I'm just going to show you how we entered them last week and how I see them going from here. And both, they're good profit at the moment, but the profit potential moving forward is really good. Now, obviously, this is my view today. My view changes daily. Obviously, the market is always on the move. So if you want to see our daily charts and levels, simply click on the link beneath this video. Now I'm going to go and look at the setups. This video, what we'll be doing is looking at getting in on the bigger trend on significant retracements in a couple of pairs at levels that offer really good risk to reward. Two pairs I'm going to look at today: USD CAD, which is up on the screen now, and also AUD USD. And I'm going to use a longer term chart. I always tend to look at a longer term chart before the daily, so it'll either be a monthly chart or a weekly chart. The reason I do this is just to find out where the really big support and resistance levels are, see if they line up with the daily chart, and also just to get a bigger perspective of the trend. Now, we're starting here with USD CAD monthly. Now, if we go down here to where I've got my cursor on the left, you can see basically we start to move into a bull trend at around 106, break up. Then we move nicely higher with a few retracements, and then we exhaust above 146. We come back through 140, then we correct the downside and double bottom here at about 125.50. Now, this for us is just a natural retracement. You can see the bigger trend is up. Now, we're extremely bullish of the USD on the commodity currency. So we're looking for higher prices. Higher prices obviously do unfold. Now, if you look at the upsloping trend line, probably goes this first candle finds support, then these candles find support, and you'd expect this month the candle to find support here as well. Yeah, that's what we were assuming, and it's also the bottom of this body here. So in terms of when we're up here, if you're waiting to get in, 131 is going to be a great level to key off for longs if we correct back to this level. Now, in terms of viewing this as a long-term bullish trend, we've got upside targets here just below the 136 level. It's about 135.80. then we expect it to go back to at least 140. It could go even higher, but if it gets to 140, we'd be very happy. Let's just look at a trade we did in the member center in terms of timing a dip to a support level. Okay, now we've got the daily chart up, and we notice it on the monthly chart, obviously 131 good support. And what we do is we see the dollar correct to 131. We come off the highs here, then we get this big candle down here. That's the OPEC meeting triggering a correction. Sorry, I've spelled triggers wrong, but it starts the correction in the USD. The CAD forces it down right to 131. This is the level we want to be alert for a buying opportunity. Now, in terms of what happens is we test the level on this red candle, bounce off it on this blue candle, okay? So what we want to do is obviously get in, but we don't just want to come in. We have the Fed meeting the next day, so we want to see a little bit more strength. So we're going to come through these two candles here above 131.50. Okay, now in terms of over here, we've got some support. We do have a couple of tails that go through the 131 level, but we finish above the level. Okay, now in terms of where we want to come in, 131.50, we don't want our stop right on a round number, because prices are very often drawn to the round number. Stops are taken out, then you see the trend reverse the other way. So for us, what we did was we gave it all the way to 130.50. Okay, it's within these tails here, but we don't expect this to happen again. That was just our view. 130.50 is our stop. What we have is the reversal day on the Fed, which you can see, which is this blue candle. Come nicely through our level here, and then we bounce up 131.50 right up to 134. So yeah, it's a good few hundred pips on the upside, and now we settle back. Now in terms of so far, it's a good profit, but we obviously from a longer term perspective think the USD CAD is going higher. We think any pullback should be held by these two candles here at about 132.70. Then we should go up to test these nearby highs, and then right up to 140. So in terms of just keying off a major support level, this one worked. And I always think, what I would say, if you're keying off a major support level, make sure you get confirmation. Don't just assume the level is going to hold. And always give your stop a little bit of room, so that just in case there is a little bit of a retracement back, like you see on this chart, you don't get caught out on a stop hit. So this one, it's worked nicely so far. I think any pullback, a buying opportunity, we will go up to test those near-term highs, and then we'll be going up later on to test 140. Now, what I want to do now is move to the Australian dollar, and we'll do the same way of looking at getting in on a trend. Okay, we're now on the Aussie dollar monthly chart, and as we can see, it is a big downtrend, but we're now consolidating in this area here, and if we look at the consolidation, we know the big trend is down. We've found resistance up at 78, okay, several tests, and then we dropped through these two bodies here and one tail here. So that was the near-term support at 75. So this candle comes off 78, slices through the 75 support level. Now, if you're getting in on a retracement, then any retracement back to 75 is going to be a selling opportunity if you're bearish the Aussie. So 75 is the resistance level this month. And in terms of first target, we put 70 on the downside here. And then second target is 64. Now, this is the big 2008 sell-off where we go all the way down to 64. We think we're going down there again. As I said earlier, we are extremely bearish of commodity currencies on the USD. Now we've had a look at the monthly chart. Let's go and have a look at the daily chart and how we timed entry in this one. Okay, now we're on the daily chart of Aussie USD, and we were saying, obviously the 75 level was the level to sell back to this month. Now, if you look at the chart, obviously the Aussie comes down strongly, gets oversold here, then we work our way back up Notice a good few tests around the 75 level. And what happens if you get a poke above here, a poke above here, and just before the Fed we were settling at 75. Now from our perspective, heavily bearish the Aussie. Where do we get in and where do we put our stop? Well, with the Fed coming up, we're expecting, basically it not to be bearish for the USD. Obviously, we think it's going to be bullish USD. So what we want to do is we want to sell signs of weakness and then decide where to put our stop level. Now, in terms of stop level, this is the stop level I decided upon, which is behind these 3 candles here. I don't want it too close, okay? In my view, there's plenty of downside potential, so my stop level is going to be back 75.60. So where am I going to enter? Well, as we're settling just before, we're sitting just at the 75 level before the Fed, I will take it through this candle here. I want to get it away from the round number, picked 74.60. Okay, so clear out that blue candle here. What happens is we fall through it and we slice out the 20-day moving average as well, which is always good news for us, because the 20-day moving average is providing a little bit of support here. So we've decisively taken that out. Next candle goes down, bounces to test 20, can't take it out, and then we settle down near 73. So a really good move to the downside, and now obviously we can bring our stop down. Okay, in terms of from here we've still got plenty of downside, and we've got a decent number of pips already. And I think if you key off these big resistance levels or support levels that you see on the longer term weekly or monthly charts, you really will be keying off the big levels. Then like I've said, never put your stop right near where everyone else has got theirs. Put a little bit further back if you really believe in the trade. Both these worked out nicely. Obviously they don't always work out so well, but over the years I've always found to back up daily with a longer term chart, find the big levels, key off them, and you'll have the risk reward on your side. So that's the review of AUD USD and CAD USD. Thank you.